Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings to everybody, guys. Let's take a look at the euro currency. So in the last week, we was watching for two major events. So that was the report on gross domestic product release on Europe and non-farm payrolls release. So it was a lot of expectation, talks about this data, and but in the result, as you can see, the data was very close to the expectation and really have made wide impact on the overall situation in the market. So speaking on the gross domestic product, this was mostly the same as expected. Even on the year-over-year basis, it was even slightly better. Non-farm payrolls release was mixed, and currently we again see the wrong understanding of this report. So as we see some numbers that are a bit worse than expected. There are a lot of talks in the internet and the mass media among the investors, experts, that this was the bad data, bad statistics. But guys, any economy, it can't create 150,000 of the new jobs each month within the 3 years. Especially when you see an unemployment rate and it stands on 3.7%, you just need to understand that market is highly saturated. The capacity of the new jobs really exhausted, and the market just can't create, the country can't create the new jobs because everybody already are working. The participation rate stands high, and it was even better than expected. It means that the people who want to work, who are looking for a job, still significant, and that's stands as a bullish factor for the United States dollar. At the same time, what is more important in this report is that wage inflation was better than expected. So on a monthly basis, it was 0.4. On the yearly basis, it was 3.4%. So that is what is important, and it means inflation is rising, and it should hold the Fed from the just free and often rate cut. So they probably will be more careful with any rate cut because they need to hold the balance between the growth and inflation. And when they see that inflation is rising, they should think twice before to cut rate for the next time. And that's what we see on the recent data from the Chicago Mercantile Exchanges. It's called as the Fed Watch tool. They show the probability of the rate cut depending on the futures quotes on the federal fund rate. And although we see just minor change that actually doesn't make an impact on overall sentiment, but still now odds in favor of the more rate cut till the December have decreased. This is the first moment. Second moment, if you'll take a look at the CFTC report that had been released on Friday as well, you could see that the net short position on the euro currency have increased. And that just tells about the opposite sentiment. So you could read a lot of talkings about investors treat it as the dovish data that will be negative for the United States dollar, but in reality, real statistics doesn't support it. Inflation is rising, investors increasing the net speculative short positions against the euro. So that doesn't correspond to the idea that this is dovish statistics. What does it mean for us? Actually, from the technical point of view, we're returning back to discussion of the same story that we are talking about. And this is grubber on the daily chart. From the technical point of view, the bearish reversal here looks not really very natural. So because this was really pretty nice fast upward action and currently suggests fast sharp downside reversal it's not quite corresponds to overall picture, but this is just technical picture. From the fundamental point of view and data that we have, we do not exclude this chance. On the way up, market has tested the confidence resistance monthly pivot point, but the first challenge was unsuccessful and market has collapsed. So here was, on Thursday, we've got this grabber, and it's still valid. So for us right now, the major point is the top of the grabber. Until it stands untouched, so bearish setup is valid. And market, by some reasons, maybe some news will be released, maybe some new information will appear. Market still keeps chance on downward action and taking out of these lows. For a bulls, if you would like to take the long position, well, you could, of course, watch for some bullish patterns on intraday charts. But it would be better if you will get the upward breakout of this top, erasing of the grabber and breaking of the confluence. That will be good confirmation of the further upward continuation. So that's about the bulls. For the bears, if you would like to take the short position, currently guys, situation is a bit difficult because we do not have clear patterns that we could follow and would take position based on it. So now we have just levels. On the 4-hour time frame chart, you can see the market challenging this confluence, standing around the same resistance areas of these previous lows here and here. Market has tested them and just starting downward action. So the major picture for this stop stands on the hourly chart. For us, here is two major levels. First one is these lows around the weekly pivot point on the next week. Second important level is, of course, the top of the grabber. So if you have taken the short position based on grabber on Friday, as we have suggested, so take a look, 618 retracement has happened at 1060. So in this case, you could just move your stops to the break-even and see what will happen. If you do not have any position and you are more gravitating to the idea of the downward action, you would like to take the short position here, actually two possible scenarios exist. The first one, you could use again the bearish stop order, stop selling order. So somewhere around the weekly pivot point. Once market will start breaking these lows, your stop order will be triggered and you will be in position. Another scenario, but with the limit order, you could wait for a breakout and then try and take the position on the retracement. That's actually two ways, because currently here, I do not see something special. So you could, of course, clarify this as kind of the hand and shoulders or something of that sort, but it's too choppy to clarify it as the hand and shoulders. So I would say that here we do not have some clear patterns. Yes, this sell-off is very good. It looks nice, but speaking on the patterns, currently it's difficult. Well, maybe if some different pattern will be formed, for example, I do not know, maybe this will be A, B, C, D retracement up again, regardless triple to sell will be formed. That's another chance to watch for. But currently we're speaking on the possible entry in the current situation. And using of the stop entry order looks not really bad idea. So that's actually what we see right now on the euro. Let's keep watching, because currently we will deal with the tactical setup on the next week. And for us, as a major riddle, is a major task is to see whether this background that has pushed euro higher, whether it will be live for another week, and whether more upward action will happen or not, or it will be very short-lived and it just will start dropping. And the grabber will answer on this question. So grabber we also will use as an indicator. So erasing of the grabber, rally above the stop, this will be bullish, stop bullish sentiment, and it will mean that market will proceed higher. Dropping below, starting working of the grabber, this will confirms our bearish view, and market probably will continue downward action. So that's what we will do on the next week on the euro.